What's up, guys? Welcome back to the channel. In today's lesson, I'm going to teach you how to identify high probability trade opportunities with A+ setups. That is how you can catch the big moves, that is the massive moves in the market. If you want to ride the big waves of the market, I'm going to show you how to catch these huge moves by identifying A+ setups. So it's going to be a very quick lesson. I'm not going to waste time on this particular lesson. Okay, so let's jump straight into it. In order to identify high probability trade opportunities, firstly you need to understand the strategy. If you want to identify A+ setups, you need to understand the strategy first, because it's from understanding all the concepts of the strategy you can as well understand how to identify A+ setups. I hope this makes sense to you. So I'm going to help you do that in today's lesson. But before that, if you're new to the channel, consider subscribing to the channel. I'm Solomon Wisdom, and here is Born to Trade. Let's jump straight into it. As always, when I want to make lessons, I usually show trade opportunities when I identified it before it plays out in the market. So I'm going to show you that quickly. So the example I'm going to show you right now is going to be on USD JPY. You see price was currently offering about 6% here, even though I went for 4%. This was price offering 2.5%, and this was when the trade opportunity was shared. As you can see, this was on the first day of June. All right, so let's see the price action on the price chart. Now, one thing you have to note is the concept I trade and I teach you is a very effective concept. It doesn't mean that I don't lose money trading the concept. As of last week, I lost 5% in the market. Yes, I lost 5% in the market, and this particular week I was able to make it back. And that is how trading works. You lose money in the financial markets and you make money as well. So don't think because I teach you A+ setups means you will be profitable without losing money at all. No, you can be profitable and lose money in the financial markets. As a matter of fact, I lose in the market and I make money in the market. This particular week I only lost one trade, and I think one of the examples, which is this particular one, is part of the setup that got to my profit targets this week. So let me show you how you can identify A+ setup. As for this particular trade opportunity, a lot of traders caught it. A lot of students sent the results to me, and I saw different traders who trade smart money concepts sharing this particular result as well. So let me show you how it was identified and how you can catch these huge moves in the market. Firstly, to identify an A+ setup is very easy. A+ setup don't hide, okay? It's not hard to identify. It's very easy. By just looking at the price charts, you can see all the confluence you need and all the things that makes it a high probability trade opportunity without thinking twice. Now, I just zoomed out right now. I hope you can clearly see the direction of the markets. By seeing the price action on the charts, you should know the direction of the market. Now, what is price saying? Price was bullish around this area, it's turned bearish, and now the current price action is bullish. And let me do the markings so you understand. This is our current range, okay? This is the overall range actually. The low we have over here, and this particular high we have right here. So this is the price range, and this should tell you that price is in an uptrend. Very easy to identify. If you are still struggling to understand, because I said to understand and identify A+ setup, you need to understand the strategy. By the two labels I did, labeling the low and the high, you should see everything. But for those who are actually struggling with understanding all this, let me do another marking which might be a little bit clearer. Now from here, price is trending up. You see it? So I hope this helps you understand now. So what we were having right here was just a pullback, right? And after this pullback, we have an anticipation that price can at least continue to the upside to get to the external range liquidity. This is now our directional bias. This has helped you understand the direction of the market, where price is moving to, and it should help you know the direction you're going to trade in. This is very simple. Okay, you understand the direction of the market. Now, during the meeting with my students, I think it was last 2 weeks, where I had a student who was trying to trade from a level right here. He wasn't wrong. Trying to trade from that level, I'm telling you the truth, he's not wrong at all. But the only downside was this level being a very tiny zone. Okay, the zone was very tiny, and I said to him that this level can offer 4%, but I can't say for more. But finally, the level offered 4% before we had liquidity sweep of this particular low. And after that, we had this massive reaction to the upside. Now, if you are new to trading, you would think that price has left without you, but no, this is an institutional footprint and it has already created an opportunity to get involved again. This is an opportunity to get involved. Why is this a new trade opportunity? Now, take a look at the previous price action. Now, if you understand smart money concept, there is no need looking at the previous price because you can see everything clearly here. But for those who are actually struggling with this concept, let me show you. Around this particular area, what can you see? Price moved with this institutional candle. You see those large candles, that's an institutional candle. Price moved with it, and after the movement, what else can we see? We had a retracement. Where is the retracement? The retracement came back to this area where we had what? A slow price action. I hope you can clearly see that. Now, after this particular slow price action, what did price did? Price reacted from there and continues to the upside. This was exactly what price did. I hope you can see that. Now, I want you to just observe these two price actions to see if I'm saying the same thing or if price printed the same price action. Take a look at this because these are A plus setups. Yes, see it right here. You see that move to the upside. Take a look at the one we have over here. You see the same move. And after that, price came back for the retest and we had the massive reaction. Now, this has now helped you to understand, okay, there is need for the retest of this level we had at the left side. Now, this is exactly the same thing we have here, and this particular one is an A plus setup, okay? Let me give you another detailed explanation. Why is this an A plus setup? If you are struggling with smart money, let me list some confluence you are seeing right here that makes this an A plus setup. So if you move to your price chart, you can go ahead and try to identify it yourself, even if you don't want to trade it. Firstly, see how price reacts to these kind of levels. Now, take a look at what we had right here. If you understand the concept of mitigation, I think during my last lesson, I said you should go and study the concept of order flow and mitigation. You will understand how to spot this trade opportunity. So if you're yet to do it, go back and do it. You want to be profitable, and to be profitable in the market, you need to suffer yourself to learn. And if you're not ready to learn, you can look to disregard and still suffer. That's why I see a lot of people struggling to study ICT concept. If you watch ICT's videos, you will get tired, but these are the price you pay to get the knowledge. He might spend some time saying things not related to the lesson, but if you have the patience, you always get the information you need and live there. Now, let me show you what you have over here. We see that price reacts to the downside, moves to the upside. Yes, we know that the institutional bias and the institutional sentiment is bullish. We know that the institutions want to push this price to the upside, but they're not going to do it immediately. They need to play around. We see them moving to the downside again, making sure they take the liquidity they have underneath this low. Why are they taking the liquidity underneath this particular low? They are taking this liquidity because of early buyers. You know, a lot of people are actually going to buy very early when they saw the initial move. I don't want this video to take long, but from what I can see, I'm already doing a long explanation here. This was the initial move to the upside. Buyers are entering the market already. Price came back, sweeps the liquidity underneath that low. Make sure that it took the liquidity. So this liquidity sweep is very, very obvious. And immediately price took that liquidity, the institutions entered the market. And that's why we saw this massive institutional move to the upside. I hope you can see that. After price swept the liquidity, this was when the institutions entered the market, moved with these candles that had large bodies. This shows that there is institutional footprint right here. Apart from that, price already took the liquidity we had underneath this low because any smart money trader looking to trade from this particular demand zone has been swept as well. So price swept the first liquidity, reacted to the upside with this little move, came back, swept liquidity, making sure that all the traders having their stop loss underneath this low has been swept. They made sure they did that. And after that, price moved away. Now, when we have this movement to the upside, that is the institutional move to the upside, it is when we smart money traders can then come back in the market because you being a smart money trader means you are following institutional footprints, which means after institutions move the market, you do what? You wait for mitigation. That is coming back to retest the level that has shown their first footprint. And what is their first footprint right here? this first move we have over here. And another thing is this price action didn't end there, because they will always try to manipulate you to lose money in this market. Now, after the initial move, what else do we see? We had a pullback. I hope you can clearly see this pullback we had right here. And after that, we have another institutional move, which is this particular one we have over here now. I hope you can see that. After the second institutional move, this is where some traders are going to get trapped again, because smart money traders are going to be looking at this particular one we have over here. That is the zone we have here, not knowing that this is price doing what? Building the liquidity. This is an obvious liquidity build around this area. Then price came, sweeps the liquidity at first. We had some reaction to the upside before the continuation that swept another liquidity under the low. But when I was marking my inducement areas, I usually mark it from area like this. Okay, I usually mark it from area like this, which means that I'm including all the liquidity above the high. So that's why I usually mark my inducement area before the inefficiency. If you watch some of my setups, that's how I mark it. So this simply means that liquidity has been built above what? This area right here. This is a very large liquidity void. And where is the point of interest are you going to be trading from? This range where we had that manipulation is your point of interest. As a matter of fact, this is your range created demand zone. This is the whole point of interest. This was where we had the whole institutional footprints. I hope this is making sense to you. This area we had this range and the sweep. This is the whole area we had that institutional footprint. And if you want to get involved in the market, this is where you should be buying from once price comes back inside this particular price range. But the way I trade, I usually do some refinements, because trading very large zones sometimes is not favorable to me. So I usually look to refine my zone. So that was why I refined the zone to these two candles here, which is the bearish candle and the bullish pin bar we had here. That was the first refinement. After that, I did the second refinement, which is refining down to, I think, only the pin bar, and I only added few pips above the pin bar to make sure I don't miss this trade opportunity. When you do this kind of refinement, you can miss trades, just like I missed a trade on GBP which I just shared to my social platforms. If you follow me, you're going to see it. So why did I miss that particular trade opportunity? It was because of refinements. I did a lot of refinements on that particular trade opportunity. So this is an A plus setup right now. If you are struggling to identify A plus setup, I said it's very easy to identify. We have the liquidity sweep, institutional move, liquidity inducement areas being built. You marked your point of interest, and this is exactly a high probability trade opportunity. And I'm very, very happy that a lot of smart money traders were able to milk this particular point of interest. A plus setup is easy to identify. Although I'm going to show you the second example, which I'm going to be rounding up this lesson with. That particular one is also A plus setup, but a little bit tricky, and it will be a little bit hard to identify that. But it has almost the same confluence as this particular one. Now, when we identified this trade opportunity, all we did was plain price forward. That is waiting for price to come back for the mitigation, which price did. And around here, you see price came very close to a point of interest and started buying. Impatient traders are going to buy at this area, maybe having their stop loss underneath the low. Price sweeps it again, then taps into our zone. Now, this price action we have over here is a very, very important price action, and some people might actually ignore it. Let me try to play this price forward very fast, because time is already counting. I don't want this video to take long. Then, boom, price mitigates our zone, react to the upside, and I made 4% around this particular area. I was able to make about 4% around here when price reacted. So I made my 4% and price starts to react. Now, do you know you have another trade opportunity from this particular price? Even though I didn't take the trade, but I'm glad that some of my students were able to take this particular trade, which means you understand the concepts. One thing about understanding smart money concepts is you don't have to trade every single thing I teach. Sometimes you try to analyze in the market and find some price actions yourself. One thing I did after my mentorship, because I was under a mentorship before I became an independent trader, doing my things myself. Do you know that 60% of what I teach here is what I got from the mentorship, but the remaining 40% is what I discovered myself looking at the price chart. Some of the things I teach is what I discovered myself, not what I was offered in the mentorship. And I'm actually seeing some of my students doing things themselves, identifying things themselves, which is very, very necessary in the market. We have another trade opportunity right here. Someone is going to say how. Now, this trade, well, let me go to the 30 minutes time frame so it will be clearer. So here is the 30 minutes time frame right now. If I try to zoom out, you see it's the same trade opportunity. Here's the 30 minutes time frame. Now I'm going to ask you, can you spot the trade opportunity? The trade opportunity is very, very easy to identify. Where is it? Here is where we had that institutional move. I hope you can see that this is more like a lower time frame confirmation, the institutional move. And before that institutional move, what can you clearly see right here? Liquidity sweep. Price made sure it swept the liquidity. Now, do you know that this particular trade opportunity has very high probability? Liquidity sweep, institutional move that was able to change in the internal structure. The internal structure was bearish. You see, the internal structure was bearish. Price hit a higher time frame demand. We had a shift in structure. This has confirmed that price is now going to continue in its bullish move. At first, I thought this first retracement is going to get to this point of interest because this candle right here that swept that liquidity is our point of interest. So since this first retracement was not able to get to the point of interest, here automatically turns into an inducement area. So all you need to do is to wait. And those who waited actually milked this trade opportunity. So let's see how it played out. So let's do it quickly. I hope you see that price came back, retest the level and starts to react. And before the retest, what else can you clearly see here? We had another liquidity sweep. So by what I'm explaining, I know that you are making notes and taking some points on how to identify high probability and A plus setup. Now price starts to react. Very good price action. So personally, I was able to take the first trade, but I wasn't able to take the second one because I had other trade opportunities I was looking at. So this is the recent price action, today being the 7th day of June. So I'm currently recording this video today and I'm actually going to post it today as well. So that is it, and I hope this particular one was very helpful. Back to the 2 hours time frame. So this is the setup on the 2 hours time frame. Very, very, very easy, very simple, and easy trade opportunity to identify. Price is currently offering about 8%. I made 4%, and one of my students made 5%. So other ones might have made less or more, but based on the results that was shared to the community, the students that made the highest from here is Mr. Christian, who made 5%, while I made 4. Others might make more or less. Let's see the second example, which I said is going to be a little bit complicated. But before that, let me introduce our mentorship. So our advanced smart money mentorship is still running. I'm going to show you some of our students who were able to get funded trading these are concepts. So if you're still asking me if you can pass your Profem challenge to be a funded trader, I'm assuring you that if you apply this concept effectively, you're going to get funded as a trader. So if you join our mentorship, you're going to have access to advanced smart money course, which is going to break everything you need to understand about smart money concepts into simple terms. Weekly chart breakdown, we come live to break charts down. You're going to be part of our VIP support community, premium possible setups, and weekly Zoom meetings. This mentorship costs $216 for now. So let's visit our VIP community. So these are VIP community, and from what you can see, you can clearly see that everyone is currently typing congrats. And why do we have this? One of our students recently passed his funded challenge, and this is his certificate. And this particular challenge was passed on the 5th of this month, and I'm currently recording this video on the 7th. So this is another student who got his first payout trading these concepts. From what you can see, he said, thanks very much, Born to Trade family. So this is to tell you that I'm not running the mentorship alone. I'm running it with every single person in the community who contributes. I can't even do it alone. This is a general community where we have advanced and beginner traders putting heads together to achieve things in the market. As a matter of fact, I think during my last lesson or last 2 lessons, I shared those screenshots where he got funded, and I think it's been 2 weeks. He already got his first payout. So you can as well try to check out that particular lesson. And we have more. And this is another trader. This is Mr. Hills. From what you can clearly see, he got funded as well. This was on the 3rd day of this month as well. He got funded. And this is it. You need to understand that this strategy works. If you need community of traders where you can put heads together to analyze and trade in the financial markets, we are here for you. We have traders in our community who are going to help you. If you need my personal guidance, once you enroll, you're going to have access to that. And these are all you're going to get from the mentorship. And if you want to see some reviews from our students, you can visit our website and try to read up. If you want to test me privately, hit the WhatsApp link right here and you can test me privately. Let's go back to the lesson. So the second one is going to be the US 30 setup. You see, first TP of the week. And the setup was, I think, from last week. Let me show you when it was shared. This is the very trade opportunity when it was shared. Let's see it on the price chart quickly. So this is the second example and it's going to be the last for this lesson. So I'm going to rush it and try to cover it up in the next 4 to 5 minutes. Now, as always, try to zoom out to understand what price is doing. Now, from your zoom out, what can you see? Price is bullish, reacting to the upside. So this should give you the general context of what you should do in the market. Seeing this alone tells you that, okay, there is need to look for buy opportunities. This is what we call understanding the institutional bias, the institutional sentiments, and understanding the institutional order flow. This is simple. Instead of trying to identify institutional bias, institutional sentiment, institutional order flow, getting things complicated for yourself, just try to zoom out on your charts. Look at it this way. Price is bullish. Very simple. Since price is bullish, you look for your demand zones and try to trade. If price is bearish, you look for your supply zones. Try to zoom in right now and try to identify the level you could trade from. You see, we have good levels we could trade from around this area. We have this institutional move. I hope you can see that. This is an institutional move. And after this institutional move, what can you see? We had other institutional moves as well. We have this particular one over here. This is equally an institutional move as well. Now, at this particular point, you will really get confused trying to know the particular level you're going to trade from. That is just the truth. Which level are you going to trade from? Because we have two levels right here. But from the recent price action, you can clearly see that price already sweats the liquidity we have underneath this particular low we have over here. See, we have this sweet liquidity sweep, and this tells you that this zone is already a failed zone. Apart from that, we had an A plus setup right here, which we were able to identify. And how were we able to identify this particular trade opportunity? Firstly, we had what? A liquidity sweep. Price taking the liquidity we had underneath this low, which is very, very important. I've emphasized on the importance of understanding A plus setup. Now, what you have to notice, A plus setup does not always need to be a liquidity sweep. We have other confluence you can use to identify A plus setup, but this particular lesson is just focused on liquidity sweep patterns, okay? Get that. So it doesn't mean other setups are not A plus if it doesn't have liquidity sweep. So don't get yourself confused. After the liquidity sweep, price had this liquidity gap right here. So this liquidity gap right here has now turned this area into an automatic inducement area, because from what I can clearly see, there is need for price to rebalance this inefficiency we have around this particular area. Select your point of interest, and this is the valid point of interest you need to trade. Now tell me what is missing. Nothing is missing in this particular trade opportunity. You've identified the institutional bias. Seeing this institutional candle we have right here, seeing your liquidity gap. Now, this liquidity gap, personally, I don't know what everyone else teach. When I see liquidity gap and it's situated at a level which suits me, just like this kind of level, I take it as my price inefficiency because there is need for it to be rebalanced. Now, price building liquidity above my zone. So this is an A plus setup. Now, play price forward and see. You see how price returns massively into the zone and starts to react immediately. So for this particular trade opportunity, I was able to make some money from it. I was able to make 4% from this particular trade opportunity. Currently, this is the recent high. But within the week, I was able to identify another trade opportunity which I didn't share to the community. I didn't share this trade opportunity to my community, this level right here, because we had this internal shift right here. So I identified that price offered about 2% and continued. So for this trade opportunity, I didn't make money from here because we had the first reaction. Me trying to be on the safer side because of NFP, I was tagged out at break even. Okay, I didn't want to lose money because NFP was coming, so I quickly moved my stop loss to break even. Then I was tagged out, and now price continued to the upside. So the NFP direction was actually bullish on US 30. So I believe this particular one was very easy and simple to understand. I've been able to show you how to identify A plus setup. So if the lesson was actually helpful, consider subscribing to the channel. Solomon Wisdom. See you in the next one.